Hello, this is Stephen from TEFAT, and today I'd like to give a presentation on payroll. Payroll is really important because the workers in a company like to know they've got accurate pays in the pay runs, and the less queries to payroll, the better. So hopefully, if you're a bookkeeper later in life, this will help you get on the path to accurate payroll if you find yourself in that department. So payroll is wages, just paid to workers according to the amount of hours they've done at an hourly rate, and some hours ordinary time, some time and a half, and there used to be double time on Sunday, but that's not so common anymore. So wages are the return for effort exerted by the workers, but salaried staff, they're paid a yearly figure by the month or fortnight, but they don't get paid for overtime. Workers on wages do. So awards used to be very common. There still are a lot of awards in place at the state and federal level, administered by Fair Work Australia and New South Wales Department of Industrial Relations. But since the 80s and 90s, and deregulated labour markets, enterprise bargains and employment contracts became more commonplace, sometimes replacing awards. So payroll is subject to payroll taxes at the state and the federal taxes is income tax, pay as you go. So payroll tax is a state tax, and we have to record these in General Journal and General Ledger, but we'll just get to that. So gross pay is what I was talking about before, just focusing on, say, the award rate and the hours, and just simply multiplying these out to get gross pay for each worker. But then the worker asks the payroll department to put deductions in place, things like private health cover, and their income might be garnished by the child support agency for maintaining a child. Union fees come up, but also the superannuation guarantee, which is calculated at 10% of gross, and we already mentioned pay-as-you-go tax, and that's taken out too and goes to the federal government. Now, we've worked out the difference between gross pay and net pay. Net pay is after the deductions have come, all the deductions have come out of gross pay and tax. So that means take-home pay, which the employee has access to. So I'm referring to this textbook I used at TAFE, which I'll source completely a bit later. It's called McGrath and Walsh, 95, page 532. There's a series of documents for payroll staff. Some of these are getting a bit old-fashioned, actually, because this was made up in the manual payroll days before computerised accounting took hold. But each employee has an employee record card. That's all their contact details, tax file number, and all new employees have to fill out a tax file number form with the ATO when they start a new job. What date they commenced or finished if they're leaving, their weekly wage as an estimation, the usual hours, what deductions they want taken out. And you've also got records of their annual leave, what weeks they've taken off, what weeks they've got due, when they do actually go for holidays. And the employee can request annual leave at certain times of year. Plus, if they get sick, there's a column for that too, all their sick days. Usually you get about 10 days sick leave, 4 weeks annual leave, and after 10 years service you get 8 weeks of long service leave. So that's just, that document, employee record card, is just for one employee. But for all employees, payroll is summarised in the payroll book. It's called a payroll register. It's got all the names of the employees, their hourly rate, what type of hours they've worked, ordinary, time and a half, double time, the tax taken out. That's net pay. That's for all employees. And each employee has got an employee earnings card. Now that's different to the employee record card, which is more a general type of record. But employee earnings card on page 533 of McGrath Walsh, that's like actual payments, like the dates of the pay run, the hours they've worked, all their contact details if the payroll person has to get in contact with them. So all their hours, their gross pay, their deductions and their net pay. And each employee gets a pay advice slip on payment, and the onus is on the employee to keep their own log to match up their hours so it matches up with what the paymaster has got. So just some general journal entries now. When you've got these different payroll expenses, you debit the payroll expense and credit provision for the payroll expense. For example, you debit long service leave expense and credit provision for long service leave. Now, provision is actual cash you've got for long service leave. It is much more superior than just running it to your overheads and accruing it. You've got actual cash for the long service leave in store for when the people do take the long service leave. Similarly, you debit annual leave expense and credit provision for annual leave. Now, when the people actually do take their annual leave or long service leave, you would go, for example, with annual leave, you would go ahead and reduce the provision for annual leave, and that's what you're charging annual leave to, and then that initial annual leave expense, which used to be a debit, now becomes a credit. You're reducing or reversing that out when they actually take annual leave, okay? And it's a similar procedure for long service leave, the longer leave. Also, sick leave expenses are debit, and you've got a provision for sick leave as well, okay? They don't always have a provision for sick leave. Sometimes they just charge it to overheads. And in the old days, employees were paid with cash in envelopes with their name on it. I remember those days. So the paymaster would have to have an itemised list of all the cash, the notes and the coins required for all the employees in a row, and then write up a column of all the notes and coins required for all employees. But that was the old days. Now they just transfer the money electronically with a credit in their bank account, their nominated bank account when they start up the new job. So yeah, just a quiz for you. What do we mean by gross pay? How is it calculated? Okay, just have a think about that. Again, it's the hourly rate, all the hours and what type of hours, ordinary, time and a half, and double time being fairly rare these days. And what's net pay? Again, just have a pause and have a think about that. A quiz question. Okay, some of you have got it in your heads. Net pay being pay from gross pay once all the taxes and deductions have been taken out. Okay. And when you so the format for General Journal is debit wages, debit provision for annual leave and sick leave, credit payroll payable. That's a very important account, payroll payable. It's where it's a go-to account for payroll, where all the pay has to go through, and you credit the deductions like ATO, tax and super and health and union dues, that sort of stuff. So those debits should equal credits, okay? But when you actually pay payroll payable, it's you reduce it, debit payroll payable when it's actually paid, and you credit bank because you've got to pay money to your employees, okay? So that's like a summary of General Journal. All right. Now there's another type of General Journal entry. It's wages that are due but are unpaid. That was from page 546 of McGrath and Walsh. You debit wages expenses, which is what you'd expect, and you credit wages accrued. So those wages haven't been paid just yet. All right. And now I'll go through my notes. So we're just recapping. In the old days, sometimes there was fraud, fictitious employees. It was called ghosting. That happened on the waterfront in Melbourne with the Painters and Dockers Union. So the payroll department has to safeguard against that, but there's very stringent checks on that these days. And false bunding on and bunding off with the time card. So that was another type of fraud in payroll. So a quiz question, what's the difference between wages and salary? Okay, wages are based on hours, hourly rates, but salaries is a per annum figure for the salaried staff. Just know, this is projected on the World Wide Web. Know the types of payroll taxes in your country, whether it be the US, Canada, New Zealand, France and so on. And so in Australia, there's pay-as-you-go tax, the income tax, payroll tax to the state government. There's a pay-as-you-go payment summary at the end of the financial year, which it's all online these days. They used to post it out, but that information is available online with MyGov or your tax agent. Don't forget superannuation. 10% is the figure now. That only changed in July of last year, I think, 2020. I'll subtitle that if I've made a mistake on that. Not a big deal, but it's now 10%. It used to be 9.5% for a lot of years. And so the enterprise agreements can influence hourly wages when the employee and employer sit together in an employee group, or the trade union negotiates for a new award under the bench of Fair Work Australia. So there's either mediation or conciliation, a non-legally binding decision, or arbitration, which is legally binding. And awards are still in place, but they're starting to get a bit old-fashioned, and much less people are unionised. It used to be 50 and 60% of the workforce in the 50s and 60s and back in time to the 20s and 30s, but now trade union membership is only about 18% now. So just recapping also those key documents in payroll. So we've got a document called the Employee Record Card. That's just like general information about the employee, their contact details, what deductions they want, a typical weekly wage and hours, but that's not at the actual payment. That information is available on the actual employee earnings card. And the payroll register is a summary for all employees, gross pay rate, types of time, whether it's ordinary, time and a half and double time, and net pay. And of course the records of all staff is on annual leave and sick leave. Now the textbook, McGrath and Rolfe, says it's on the back of the employee records card, annual leave and sick leave. So I'll just take their word for it. That's okay. It probably is. Pay advice slip goes to each employee. Now, just be clear on the debits and the credits again. You debit payroll expense, credit provision, and then you reverse that out when they're actually paid. Debit wages expense, credit accrued wages. Also, another really important payroll general journal entry is debit wages expense, credit those provisions again, credit payroll payable, credit those deductions and taxes. But when you actually pay the payroll, you reverse payroll payable, you reduce it, you debit it, and credit bank, outgoing cash. So back to my notes. Just be familiar with the types of deductions, the general journal entries, the types of documents, for example, employee records card, payroll register, how long service leave is, after 10 years of service, 8 weeks of leave. Annual leave was put in place in 1944. and long service leave was put in place with legislation in 1955 in New South Wales. Just get some practice on posting those general journal entries and then the postings to general ledger. And I think that's an adequate presentation on payroll as a podcast format. So thanks for listening to this podcast, and I'm Stephen from Trifolium Economics and Financial Accounting Tutoring, TEFAT. Check out the TEFAT website, TEFAT, on other presentations. Get the exact title of it on YouTube and watch some others in economics and accounting. Again, thanks for listening, and have a nice afternoon. Bye.